I took this trade on go, but let me just clear everything and then break it down for you from scratch, right? Let me just clear everything and break it down for you from scratch. So I've actually been looking at gold for a long time, right? I've actually been looking at gold for a long time, and then, like, you know, gold, just like Bitcoin, was forming some pattern, right? Some triangular pattern. You guys know that I already broke down how these patterns work for you, right? So if you look at this, right, all you got to do is that you're going to spot that if you pull like a trend line from this angle all the way down like that, right? Let's say gold was here, right? Gold was here when that thing was happening, right? And then you pull like another from here all the way here like this, right? Then you're going to see that, okay, gold is trading up, down, up, down, up, down. So normally you're expecting that what it should just like come down like this, and then maybe come up like that, and maybe come back down like that, and go up like that until it's tired, and then it breaks out. That's what like every, you know, trader normally would be expecting, right? No cap about that. That's what every trader would be expecting, and that's what I was expecting. That's what I was expecting as well, right? Now, you guys know that there's also another aspect of how I break my market down, which is like what the market does in a week. So it means that this is what happened like the week before that, and then this is what was happening in that week. So on a normal circumstance, this was probably like Friday, which you'd also think that if this is like Friday, then it's very hard to think that this thing is going to like break down like this and then go up in the same Friday. That's the psychology that most people miss out when I'm teaching. Like, they don't get that little bit of like nitty-gritty details that are sent out. But if you miss that details, I'm sorry for you. But yeah, like, let me play this forward and then see what happens, right? Let me play this forward, and then you're gonna see clearly what happens. So forward, the week ends, right? Look at it. The week just ends with this line appearing there. Then I know that, okay, then we're in a new week. So if anything at all, then this is the week that this thing is going to like maybe touch here and then blow up that like that, right? So that's what I'll be expecting. I want to see it touch there, blow up like that, right? But now, here's where all these chart patterns can also be sometimes very tricky, because like you're thinking that it should touch there, right? You're thinking that it should touch here and blow up, but it could also have a different expectation, which is like, you know, break that range and then come down like that. It's how the market manipulates, you know, because we have been conditioned to think that when you see this type of chart pattern, which is like in the books anyway, and it happens far often than not, you're expecting that it should break out on the upside down, rather like come down. So everybody's thinking buy, and then the market can decide to now think of a sell instead, right? So I'm always like wary of that. Anytime I see chart pattern, I try to be a contrarian. I know that everybody's trying to go buy, but I'm trying to see, will I be tricked into thinking of a sell before I do that, right? Somebody said they have an exams at 11:30, but is here watching. That's a big love to you, Carlos Bolt. I feel you, my brother. You're the real G. Trust me, whatever you're gonna write in the exam ain't gonna help you the fucking life. Whatever you're gonna write in that freaking exams ain't gonna help the fuck in your life. This is what is gonna make you, you know, the type of exams that I wrote in business school, quanti and then blah blah blah, all of them, they didn't apply in technical analysis, but you need them anyway, because tell you the truth, they also help to develop like your mental faculty in life analysis. You know, you need them anyway. They kind of condition your brain to be a tough thinker, right? So you don't want to you know, totally deject school though. Anyway, yeah, research method and what mention some of those nonsense topics that we wrote, and then like you see, now we hit the trend line, right? Now hit the trend line. That's a new week, right? And then this thing came, right? Ideally, for a higher time frame trader that trades on the 4 hour, like what I do, right? This should be our ticket. This should be like our very ticket for that trade. Ideally, like this should be like our ticket for that trade here. We're supposed to enter that trade from here. You know, ideally, from all that I've been teaching you, that's exactly where. Let me put that love emoji there. Yeah, this one here should be like our ticket for that trade. Just right here, right? ideally. And then if you trade on the lower time frame, let's say 15 minutes, right, you can come all the way down. And then even for a 15-minute trader, let me show you. For a 15-minute trader, ideally with what I teach, your entry should also be here within the wicks, within the rejections here, right? But for somebody who does not really want to be stressing with up and down movement of the market and then lower time frame gyration, then I've shown you your entry, right? It's just a small pip differentials. It's just a small pip differentials from the two, so it's not gonna really like. I mean, it's what we call opportunity cost. Opportunity cost of having to stay glued on your chart to catch the lower time frame is giving away some few pips to have a free time on the higher time frame. Think about what I said. What I said is very deep. If you don't really think deep, some of the things that I say casually, you think that I'm just like rapping, but I'm spitting like detailed facts. It's opportunity cost, right? Opportunity cost of being glued on a lower time frame, looking for trades here and there. It's giving away some pips for your entry, say, to be on a higher time frame. So it means that if hey Jesus Christ, is it a cigar that is letting me say that? If Aram Della is in, let's say, like 10 pips in profit or 15 pips in profit after being on the lower time frame, which normally would not give him like the big gap perspective of the market anyway, because you cannot really have, unless he does like multi-time frame analysis, then he would be like 10 pips in profit, 15 before like finally the market closes on the higher time frame. Then I'll take that trade, right? You know what I mean? Then I'll take that trade, and then like, so it's opportunity cost of giving away some few pips. Then you can do that. But like, yeah, like I'm saying, that would be like your ideal entry. Look at how incredible this market played out from here. Boom, 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 like that. Boom. Right now, boom, 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 like that. Everybody missed it, including myself. Well, I did take this trade on Yasin's account when I was in Cape Town here, right? I took that trade for Yasin. Guess that Yasin was also scared to the balls, so he did not really let us like. And I think it was very early in the market, so we're like, okay, let's just take this trade for a while. Let's just take it for a test. And then it was an impromptu setup. I had not really thought about it. I just saw it on the market. I'm like, Yasin, I think this thing is gonna blow up, and then we just took it. And then we just like, so it was like a show off type of a trade, right? But the interesting thing was after this one had played out, right? The interesting thing was after this one had played out. Now I'm like, okay, regardless of what has happened, this market was trying to like hit 2050, right? Now you see that this is what 2000 region. 2000 here, can you see? Can't see clearly, let me move it. 2000, and this one is 2050. Between here and here is 500 pips. It's hard for the market to literally start. It does happen anyway, but not all the time. So literally start like a massive rally like that, and then just like boom, 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 without like pulling back or anything. Then boom, hits that psychological, from like one psychological level to another like that. You get it? Like this is let me come back. This is 1950. So 1950 to 2050 is like 1000 pips. So it's hard for the market to just always just like rally straight away like that. 1950 straight up to 2050, 1000 pip easy like that. It's hard for the market to always give you. So it meant that no matter what, I kind of expected that in between we're gonna have like some retracement, some pullback, right, before maybe like that push up. Now the real question now began to be, where is that pullback going to end when the market should intend to do that pullback anyway? Where is that pullback going to end? Now you see that what? This is where the classical trading strategy that all of you fancy comes in, which is like the break and retest that everybody fancies, right? But I would use like an alternative method, which is like a retracement, right? Fib retracement levels. Some people would just do break and retest. So break and retest, they're just expecting that, okay, the market has broken from this region, which is like this triangular region, right? Then it should come back and retest this region and go up like that. But me, I'm looking at it from, okay, a fib level. But at the same time, I also know like the break and retest strategy already, or I understand the concept of the break and retest, right? So let's see if indeed when it started actually retracing, right? Now with retracement, this is where most people also don't get it wrong, because let me tell you the truth, some traders, the moment the market is like here, right? Let me show you. Some traders, the moment the market is like here, right? The moment the market is like here, then they start putting like retracement 2. That is a wrong way to do it, right? That is a wrong way to do it, because why? Who can tell me why? Like, in fact, you see a market like this and you start putting like Fibonacci retracement. That's like the most rookiest technical analysis I've ever seen. That's like somebody who does not really understand mathematics, or does not understand the psychology of the market. You know, if you're a trader that does that. Before, you can't tell if it's going to continue. You know? You can't tell if it's going to continue. So, you want to see like at least some portion of the market retracing in the opposite direction. Right? Like, okay, comes down, you know. Then you see that, okay, at least we're making some level of retracement. Then now you can put like your Fibonacci 2 from here to the top like that. And they're expecting that, okay, if anything at all, the market should favor what? Between the 50 and 61.8. Then that's where you're going to see that coincidentally, the 50 and 61.8 also tallies perfectly with that trend line breakout and retest that we're waiting for. You see how confluence trading works. Boom, 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 boom. Like as simple as that, right? Oh, what did I do? You get it? That's like what we call confluence trading. Boom, and then you're expecting boom, just like that. Easy peasy. So like you see, I just did my analysis and I was now waiting, right? Let's see. Waiting. New week, came into the zone, tapped into it. Boom, flattered with the level. Right now, this is where, if you're a trader that trades lower time frame, like my people, like I taught them, then the moment you touch the line, then you should be here. You should zoom in. I'm talking more about that. That's like another level. But maybe those who know. But I won't go into details. But I've given the light already. But if you didn't grab it, that's it. But if you don't trade that lower time frame, all you got to do is like just still be on the high time frame. 2 hour, 1 hour, 4 hour. Okay, you're looking for like confirmations, because we've already flirted with that level there. Beautifully done, right? So now you're just waiting for what? That bullish, you know, involvement. And this is where it starts showing itself up. Like for a risk entry, you can just jump in here. This is like for a risk entry. Risk entry level is this, risk entry. And then for somebody who really doesn't want to take the risk, but wants extra confirmation, confidence, then they're going to wait for this one, right? Which is like this very bullish engulfing one, which engulfs the whole bearish and then confirmation down here, right? That's like, you know, somebody who does not really want to wait. So they're going to have an entry, which is exactly on the 20,000, and then see what happens thereof. Boom, put you in some, say 40, 50 pips, boom, comes back, right? So if you've trailed your stop loss very early, this is where you get out of the market, right? But ideally, you should be able to re-enter knowing that the market structure has not changed, and then confirmation is still very valid. Then boom, comes down a little bit to scare people out. So this is like the re-entry level that you would have got, a better one as such. And then it went back up again. Then boom, comes down a little bit. You know, this was in the dawn, during Asian session. So ideally, you should be asleep. That's why, you know, in swing trading, we say what? Just set and forget. You put on the lot size, you set your stop loss, you're very confident of the setup. Forget about it. Go out roaming, go out sleeping, go out chilling. Look at me. Yesterday, I went to the wine farms. You know, went to taste some wines, Cape Town wines. Then I went to a place called, hey, where did I even go again? After the wine farms. I think I went somewhere before the wife. Yeah, I went to a spa. I went for a spa treatment. First thing I did, I went for a spa treatment. You know, you guys, your bones are so rigid. No flexibility in your life. You raise your hand, it's just cracking, crack. You don't massage your shoulders. You're always sitting on the chart. Go for massage. Go for massage. Then I went for facials. As well. Clean my face. You see how my face is always like smooth. You guys are always admiring me. No pimples, nothing. I take care of myself, bro. I don't gotta be making money and then looking rusty. Your teeth all brownish and stuff like that. Like, but me, I purposely left this thing. Normally, this thing, it go broke because I was eating a chocolate that I had frozen. It was so hard, and then it broke my teeth. I feel like it's nice. It kind of looks nice on my face. Other than that, I'm so protective of my looks. I would have gone to like seal it, but like look at me, no pimples, fresh. The only thing that I don't take care of is my haircut. I don't have time for that, like, you know. But like, I'm an Afro man. I kind of like it that way. But like, take my advice. Treat yourself nice. You know, go to the spa, go to the massage. Always look clean. Always look clean. You know, don't be making money and always just like living some ragged life and be like, it's the pocket that matter, it's the bank account that matter. Next of kin will enjoy your money for you. The next of kins, them to then they waste the money pass. It's funny to say this, right? Not to shade all respect to, you know, the Archbishop, but I was looking at, like, let's all be honest. Look at Archbishop Duncan Williamson. Imagine that the Archbishop is like saving his money. He's like properly thinking that, oh, I'm saving my money for my son. I want him to come and inherit all the kingdom wealth that I've created. You'll be twerking on the money and balling hard on the money for his father. Meanwhile, his father has been toiling all his life. So enjoy it when you are alive. Anyway, enough about that. Let's go to the chart. Now, this was about, let's say, 40-50 pips thereabout, right? And then see another small pip movement, and then boom, you know. Here's 200 pips. So here, let me come back. Here, when I woke up, this done. Here, beautiful 200 pips. By here, like we've crossed about, you know, 45% of the target. 45% of the target. Ideally, put stop loss at entry. Rick nonsense. Foolish man. Rick says like he's twerking on my money. Motherfucker. Boy is just eating my money. But you know, 200 people stop loss at break even, take some profit off, do whatever you want to do. That way you're not so, like, you know, attached to the market. Because see what happened, then we have this retracement. Even though I kind of feel like, you know, it's just like to scare the weak links out, and we're going to still make some waves on the upside. But you can see how the trade literally played out. Beautiful entry succession, like well thought of setup, well, you know, spectacular entry. Everything was just on point, you know. So that's like me sharing like a proper setup to you, like me sharing a proper trading setup with you guys, you know, understanding how like pro traders do it behind the scenes. And this is the life, this is what can give you the life that I live, you know, to be out here, you know, smoking Lonsdale, and then eating breakfast, looking at the charts, and enjoying good views. Solely the market. Okay, I think that one thing that I almost forgot was you guys are requesting what? The CPI update, right? I see that you guys are requesting for my CPI thoughts. Tell you the truth, right? Tell you the truth. Usually it's very easy for me if I have like a little bit of a glimpse of the market, think through it, and then I'm able to like come out on Instagram live and share with you. But today I've not looked at it at all. So we are all going to do it from scratch, right? do you understand what I mean? Normally, like, I'd have like a perspective behind my head, and I know how to, you know, break it down and see. But now I've not done it at all. So let's all do it from scratch. I open my trading view. I mean my Forex factory anyway. We can see that what at 12:30, it's still Ghana time, so it's going to be like 2:30 my time here. You know, Cape Town is like 2 hours. So 2:30 CPI monthly. We have what 0.2. That's the forecast. That's the expectation. But I'm always not interested in like the forecast. I'm always not interested in the monthly breakdown. I'm always interested in the yearly, right? Year to year. Right now, CPI is Consumer Price Index. It represents inflation, how prices of goods and services are becoming expensive in the country. So if it is high, then it's not good for the country. But if it is low, then it's good, because it means that they are keeping their price of goods and services very stable. Right now, it means that for here we can see what CPI previously it was what 6%, and then they are expecting that it should be at what 5.1, which is like a good job done, right? A good job done to keep the consumer price index low, which is good, which also means that then the US dollar will be strong. Now, if the US dollar is strong, that's going to disrupt so many things on our chart, which means that this profit that we're seeing here is likely to even lose it, right? Which also means that GBP USD is also going to do what? Drop from here, which is already showing those signs, right? And then it also means that Euro USD, which is also like a break and retest scenario, you can see that it's going to use that as an opportunity to drop, right? And then so I'm going to analyze 3 out of it: gold, GBP USD, Euro USD, and then I'll take USD Swiss franc. That means that USD Swiss franc is also going to do what? It's also going to push up, right? And then already you can see that USD Swiss franc, it is also creating that side of like a double bottom scenario type of a thing going on here, right? But let's look at the XY. Normally I don't like to use the XY in confluence with CPI data, right? The XY is independent on it. On those data, they don't really affect it, you know, like primarily the same as US 30, and they're the same as Nasdaq. Sometimes I see people using CPI to trade US 30 Nasdaq. You must be very skilled to be able to do that. You can't use like the rookie knowledge or basic knowledge to do that. You're going to throw yourself off totally, you know. So let's stick to GBP USD because it's very direct. Let's stick to gold, and then let's stick to Euro USD, and then you can add a bit of USD Swiss franc if you so wish, right? But now this is where the tricky part is, because when it comes to like CPI, it will happen that way if like what I'm saying comes true, which is like the forecast being 5.1, and then actually it actually does come out as 5.1. That means that it has served the purpose of the speculators, right? So it will be weak. But if anything changes from here, then it does not serve their purpose, especially if it should be higher than this, right? If they expect it to be 5.1, if it comes out to 5.5, if it comes out 5.7, if it comes out 5.8, it's better than the previous one, but it did not serve the investors' purpose. So guess what? Then you'd have these markets, rather than go up, right? It will rather what? Trade down. So you'd see USD Swiss franc break down. You'd see Euro USD continue upwards, which I'm expecting some level of it to reach to this level here, right? So that level is still holding here, right? Which is around that 1.1020 region, right? So I expect Euro USD to continue upwards, perhaps even reaching this. And I have another level for GBP USD as well, which is also up there, right? It has already retested this 1.25 psychological level. It's also going to continue upwards and tap that region again. There's another level up there somewhere, but that's quite far away, which is like the 1.2660. But I expect the 2.5 first, you know. And then that is what will fulfill gold into actually doing what it's supposed to do, which I've been anticipating, which is going to hit that 2050 region. So it's a dicey thing, right? All you got to do is that what? Have a fast processing brain so they're able to break down the number exactly when they come, you know. And then what makes it even more beautiful is that Forex Factory even does the work so simple for you, in that the color that is going to come, if it appears green, then it tells you that they're strong. If it appears red, then it tells you it's weak. So follow the Forex Factory interpretation of the colors before you take certain action. It's one of the reasons that actually almost made me lose money.